Hi, this is Brenda Green and welcome back to Living in the Go. So today I'm talking to you about bonds. In fact, I'm titling this Bond, Yes Bonds. Kind of that James Bond feel to it. But I don't talk about bonds a lot. I talk about stocks, ETFs, mutual funds, but not a lot about bonds. So let's get into it. So some basic things to know about bonds. So you can add bonds to your portfolio. It gives you a little bit of diversity. Bonds are a little more stable. They don't have high interest rates necessarily, but they don't lose a lot of money. So people like to have a few bonds in there. And when the market is going really crazy, sometimes people like to have bonds because it gives them more security. So bonds. So what is a bond? A bond is a loan that's taken out by a company or a corporation that you buy their bonds, and so they use this money to invest in their company or do whatever they need to do. And they do that, they create these bonds so they don't have to go to a bank to get the money. So you invest by buying the bonds, and they use that for the capital, that whatever they need to do. So the company pays you interest, and typically it's like semi-annually or annually, right? And it's a coupon that you get. Now, that rate, you continue to get the interest, and then when it matures, because there's a maturity date on it, when it matures, then you get your principal back plus that interest. So that's how a bond works. If you look at them, all of them have a date on it. So the returns on the principal come at the maturity date, and you make sure that you're aware of that when you get it. There are different types of bonds. There are corporate bonds, there are sovereign bonds or government bonds. We refer to them as treasuries. So those kind of bonds, and municipal bonds, which are local government kind of bonds. So the dates that they are paid and the maturity date I was talking about. So if it's a short-term bond, then it's from 1 to 3 years you get your money back on it. If it's a mid-term bond, it's anywhere from 4 to 10 years. And a long-term bond is 10 years. You don't necessarily want to get a 10-year bond because that interest rate, if it's really not good, it stays low. You don't get a lot of money back, and your money is kind of tied up for 10 years. So maybe the short-term bonds or the mid-term bonds, seeing what your portfolio needs at that time. But just something to think about. If you want to add a little diversity to your portfolio, you can think about bonds. Bond, yes, bond.